So, today we are digging into a day of just wild contradictions. We're talking about one of the biggest stock market rallies in a year, and it's being fueled by hopes for peace. But at the same time, we're seeing soaring gas prices and some serious economic pain. What does all this mayhem really mean for the market, the economy, and for you? Okay, first things first. Let's talk about the massive headline that absolutely shook Wall Street. The market just had an incredible day, its biggest single-day surge since last May. And to put some numbers to this, check it out. The Dow Jones Industrial Average just skyrocketed, closing up by more than 1,125 points. That's a huge single-day gain of about 2.5%. And it wasn't just the Dow, not by a long shot. The S&P 500, which, gives us a much broader look at the market, had a spectacular day too, rallying an impressive 2.9%. And not to be left out, the tech-heavy NASDAQ. Man, it just blew the doors off, surging a massive 3.8%. Just a truly stunning day across all three of the major indices. All right, so what on earth could possibly cause such a huge synchronized jump like this? Well, the answer isn't some amazing economic report. Nope, it's something a lot more delicate. And that brings us to the one single piece of news that just poured gasoline on this fire. Traders on the floor were already calling it the Hormuz Hope Rally. Yeah, the entire rally is basically balancing on a knife's edge here. It's all about these faint but really powerful signals coming from both Iran and the US that suggest a ceasefire in this month-long conflict could finally be on the horizon. That little glimmer of hope was literally all it took for the markets to just erupt.
But here's a reality check, and it's an important one, from Jamie Dimon. He's basically saying, hey, it's great the market popped, but we need to look past that one-day sugar rush. The real prize here is a lasting resolution to the conflict itself. That's what really matters.
And he's right, because this rally absolutely needs some context. Look, one great day doesn't just magically erase a whole month of pain for investors. The Dow and the Nasdaq are still technically in correction territory after a brutal March, the worst month, in fact, in years for them.
Okay, so let's zoom out a bit, because while Wall Street was popping champagne over potential peace, the economic fallout from this whole conflict is already hitting all of us right in the wallet. And I mean hard. And just look at this contrast. It is stark. We just blew past that huge psychological barrier of $4 a gallon for gas. To put it in perspective, this jump in March was the single biggest monthly percentage increase in gas prices in 20 years. 20. And listen, this is so much bigger than just your daily commute, right? These higher fuel costs, they just eat away at everyone's budget. And that slows down consumer spending, which is what really drives our economy. And you can see here, the ripple effect is huge. What's even more critical is diesel, because that price is climbing even faster. And that's what drives up the cost of basically everything you buy. And yep, that pain you're feeling at the pump, it feeds directly into our next big topic, that persistent, really stubborn problem of inflation. So, mostly because of this oil shock, the Cleveland Fed is now projecting that annual inflation for March is going to hit 3.3%. Now, that might not sound like a huge number, but it's a massive jump from the 2.4% we saw just the month before. And here's why that number is so important. We've got a quote here from Fed President Jeff Schmid, and he's basically warning everyone, hey, we can't just assume this price spike is transitory, that it's just going to go away on its own. With inflation already high, this is a serious problem they have to deal with. So, okay, let's recap. We've got this euphoric market rally, soaring gas prices, and rising inflation, all hitting us at the exact same time. It's chaos. So how are you, a regular person, supposed to even begin to process this and figure out what to do with your money? Well, there's this really fascinating thought experiment. It's called the coma patient analogy, and it's just a brilliant way to think about perspective. Basically, imagine you just fell asleep for the entire past month and missed all the crazy daily headlines. You'd wake up, check your statement, and probably think nothing much happened. So here's the lesson, the big takeaway. All those jarring headlines and the wild market swings, they make you feel like you have to do something, right? You have to react. But what history shows us time and time again is that tuning out that noise and just staying the course is usually the most profitable strategy in the long run. That crazy volatility, well, that's just the price of admission. And hey, don't just take my word for it. Even the Oracle of Omaha himself, Warren Buffett, he just reinforced this exact same point this week. He basically looked at the recent market dip and called it nothing. Can you believe that? Nothing. Because he's seen 50% drops in his career and still come out on top. Which really leaves us with one final big question to chew on. In a world that is just constantly screaming at you to react, to buy, to sell, to panic, what if the absolute smartest, most strategic move you could possibly make is to do nothing at all?